where else are you finding some amount of valuation cushion, given the fact that it's such a well-discovered market, that we're in right now, as opposed to what we were, say, even 7 years back?
Yeah. So, Ayesha, more than valuations, I mean, of course, that's a critical point, but I think we've got to look at it under the lens of earnings, because this market has been very, very sensitive to earnings. It doesn't matter if you're cheap. If you're not delivering earnings, you will continue to remain cheap. So there's an element of wherever earnings are surprising, prices are reacting and valuations are improving. So the focus actually has to be on earnings growth. And we're seeing, this year still has been more cyclical earnings growth, which is oil and gas, metals are contributing a lot to the overall earnings growth of whatever, 10-11% we are looking at this year. But next year, when we move to FY27, we're looking at 15% earnings growth, which is a lot more broad-based. It'll be driven by banking, it'll be driven by cement. There are more defensive sectors, less cyclical sectors also coming into the picture. And I think that, therefore, broadens the range of companies and sectors you can invest into. So I think we're looking more at the earnings angle rather than the valuation angle per se. And that's, again, it sort of still marries in with these three broad areas I mentioned: financials, telecom, and consumer discretionary, or the consumption side overall. I think a fourth area that we generally like long term, which is just buy, hold, forget type of a sector, would be pharma. I think pharma has consistently shown the ability to create value for shareholders. And they'll go through their own little ups and downs, but it's one of the best buy-hold sectors that we've experienced in India, at least.
And what's the avoid?
I think capital goods, industrials, we're just a tad, again, here's where the valuation comfort is a bit lower. They're valued already for decent growth. Any disappointment there can be a challenge. So I would say, to some extent, capital goods, industrials. IT is interesting. It's sort of already underperformed. There's a bit of a consensus that large cap IT will not do well and mid cap IT will do relatively better. I think the struggle continues on this sector a little bit, but valuations are supportive, but we have to wait for growth. Until growth comes, it's going to be a challenge.
I get that point now with the IT example.
Exactly.
Okay.
So yeah, I would say more some of the cyclical sectors is where we'd be a bit careful, barring maybe commodities as an exception.